morning and welcome. Patriot Radio News Hour, Joe and Jason on this Thursday. I hope you're all getting ready as we're waiting to see what the latest developments will be. All eyes on the Middle East. And yesterday it was all over the news that the United States is trying to get more equipment in there before Israeli goes in, but by the end of the week is still the word. We'll see. We've got a new Speaker of the House. Yeah, they did it. And Captain MAGA, can I say that? A big-time Trumper gets the nod in the first piece of legislation already through, and it was simply a resolution backing Israel. Mike Johnson, a Republican from Louisiana, is now the new Speaker of the House. This is one of the guys that Matt Gaetz was in favor of. He gets the nomination, and I'm not surprised. First resolution, hey, we support Israel, which means the big spending is just around the corner. 800-951 0592. That is our toll-free number. AllAmericanGold.com is the website, and I highly suggest everyone, I've been saying it all week, get an order in. Maybe it's not a big one, that's okay. But make sure you add to your portfolio before this whole thing really takes off, because, Jason, I'm hearing that I'm not sure is Iran going to end up being the target of all this? That's to be determined. But there is big talk coming out now that they're going to impose an oil embargo on Iran, which is going to obviously cause a huge shock into the oil markets and everything else. And it kind of makes those deals. Exxon made a big deal. Chevron made a big deal. Just all of us, just right before all this happens, they get these big deals done. Bank of America starts talking about $250 oil. Goldman Sachs says, it's weird because the numbers the government's putting out don't match the numbers that we're putting out. And I think we're getting set up here. So the inflation, the myth that inflation's going away, I don't think so. And I actually think it's not just going to be energy prices. I think a lot of things are going to suffer because of it.
Well, if you stop Iran from exporting oil, then they could, I guess, block the Strait of Hormuz, and then you have $200 barrel oil. I guess it's kind of that simple, isn't it? These forecasts are coming from somewhere, Joe.
Yeah, blocking the Strait of Hormuz, that's different, right? That's more than $200 oil, right? Because now that's Saudi Arabian oil, right? So that would, if that came to be, you would probably have to see the United States actively involved. I mean, are we going to get to the point where they're going to be escorting oil tankers through the Strait of Hormuz? I mean, that's one of those things. It'll be interesting to see. Right now, I'll just say this, because Jason and I were talking this morning, and Jason's the one that said it to me. He goes, notice on the news, when they talk about Hamas now, they don't say Hamas. They say Iran-backed Hamas, right? They're building the case, right? This is how they're going to build the case with the public that, hey, something's coming. Iran's not getting out of this. I guess that's my point. I don't think they're getting out of this. I think that the government and through their media arms are building the propaganda, already, let's face it, they've already labeled Iran's been on the bad guy bus for a very, very long time. But again, I think this is just a precursor to let people know, hey, whether we go into Iran or not, there's going to be sanctions, and there's going to be big sanctions, and it's probably going to be oil.
I think, Joe, most likely is going to be the same situation we have with Ukraine. We're not going into Russia. No one's pushing any NATO country to go into Russia. It's just a war with Russia, right? So I think this will be, you don't go into Iran, but sanctions and oil embargoes and shutting down bodies of water, all of that, Joe. That's what I see. Because I don't even think the Western powers I don't think they have enough guts to just go into Iran. So, but I guess that's where Israel's the wild card, right? I guess Israel could always just step over the line.
Well, and again, I guess it just depends on how many rockets target U.S. troops, or maybe it's civilians, right? There's plenty of fodder, if you will, to if they want to, right? They'll come up with an excuse that they had to do it, right? Did you see what they did, right? And we'll see. All of that to be determined. Today, we got down markets again. We had GDP. Man, by the headlines, what a report. You'd have to think that the Federal Reserve, once again, has screwed it all up. Third quarter GDP, 4.9%. Not negative, no, positive. 4.9%. Absolutely massive. Here's the one problem. Everyone knew it was going to be big. Wall Street was actually expecting it to be even bigger than what it was, which has now got everybody kind of on the back foot. A lot of different things played out. We had, remember, the calm summer. We had a lot. The travel was real good. The Barbie movie, Taylor Swift was doing it. Believe it or not, those things moved the needle. But you can hear from all the Southwest, the latest. Travel has stopped. But government shutdown. Once the government reopened, the government spent huge amounts of money. So everyone was anticipating a big number. It was a big number. Apparently not big enough. Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Thursday. A quick look in at the markets. The Dow is down 150, back below 33,000, 32,880 right now on the Dow. The S&P has broken down, which it's been very, very resilient. Down 32 points, 4150, below 4,200. The NASDAQ also breaking down, down 150 points right now, 12,680 on the NASDAQ. The 10-year note, 412 or 492. We'll see. Today's another one of those days where we have to sell a lot of debt, longer-term debt. We had another debt disaster yesterday. We'll talk about that in a minute. The Japanese 10-year note, 0.89, continuing to creep higher. Remember, Japan has been forced to step in. What's more important to the Japanese? Keeping the 10-year note below 1% or keeping the Japanese yen below 150? We may have our answer. The yen right now, 150.37. So at least for right now, and I think rightly so, they're trying to keep a lid on the debt markets. Gold is just kind of sitting back. It's watching, it's waiting for the news. Pretty flat today. 1980 right now on gold. Silver, the same thing, kind of just hanging around right below $23. I think they're waiting for the Middle East to do what the Middle East is going to do. But if you're sitting there and you're like, okay, listen, I get it. I got to get my gold and silver put away. I got it. But man, I have this other money. You know what? I've got this IRA that's in the stock market, and man, it got trashed last year. It was looking okay this year, but now all of a sudden it's getting trashed again. Maybe I need to do something different. Check out our friends at Y Refi, because it's not correlated to the stock market. It doesn't matter. Listen, I don't know what the S&P is going to do. Is the S&P going back to 3,800 before the end of the year? Could be. Is it going to go back to 4,400? Maybe. I don't know. But guess what? Y Refi doesn't care. Doesn't care what Wall Street does. Up, down, sideways. You get a fixed rate of return up to 10.25%. You can use an existing IRA. That's why I'm telling you. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just do what I did. Just call them. 888-YREFI-24. And Jason, it really is an interesting picture today with the new speaker, Mike Johnson, Captain MAGA, huge Trumper, now going to be the new Speaker of the House. The first resolution is, hey, we support Israel, and I think that means the spending package is going to get signed off on, and I can just tell you can already feel it. That first $105 billion, that's just the start, right? It just has that feel like that's just like a down payment of things to come. We had a big GDP number. I mean, it was huge, and yet maybe not good enough. And then the debt markets. We're watching Japan. We're watching the U.S. Yesterday, we had to sell $52 billion of 5-year notes. Now, that's not 10-year, 20-year, 30-year. And it was a problem. Another big problem. The fourth biggest tail ever. Right? So remember, now listen, we don't need to get complicated on it. Just take my word for it. Tails are bad. The bigger the tail, the worse it is. In other words, what does that mean? That means what Wall Street wanted the rate to be wasn't good enough. And everybody that was there said, well, I'm willing to buy some of that $52 billion, but not for what you want. No, you got to pay me. That's why the 10-year note shot up big yesterday, all because of this auction. The bid to cover, terrible. Now, that's an important number because that tells you, hey, are there a lot of people there, right? How many hedge funds are there? How many money market funds are there? How many sovereign nations are there? How many wealth funds are wanting to buy? What about the insurance companies? Because they like to buy this kind of stuff. And it was a lot less. Matter of fact, one of the worst bid to cover, and this is a 5-year. So you would think bid to covers would still be okay. It's not that long. But then the really bad part of the auction, how much were the dealers stuck with? And the dealers, these are the banks, right? This is the one. Jason and I have been telling you about the reverse repo money. You know, they started the year with $2.5 trillion. And then they started whittling away. And then this summer, it was at $2.2 trillion. Last we saw, it was at $1.2. Look how fast it went. They had to take 20% of this auction, and that is double, more than double of what they've been wanting to take down. And Jason, this has been the theme now going on like 3 weeks, where these dealers on these longer-term auctions are being forced to buy way more of the auction than they want to.
Right. And it's not really, I don't think it's because anyone really wants to buy it. I think the only reason they're buying it is because they're holding a bunch of it. So you kind of got to support your position, but you sort of want to eliminate your position at the same time, especially if you get the higher interest stuff and get rid of the lower interest stuff. Everyone's trying to wean it, right? They're trying to wean off that lower interest stuff. And some big players are going to step away hard from this at some point. That's probably when the war is going to get worse, right? At the same time, probably.
The banks have to buy it. And again, if the dealers didn't buy 20%, how big was the tail going to be? Because they know the banks don't. We have to, because, man, we're going to actually put other banks out of business if we don't step in. And for them to have to buy that much, that just tells you everybody else wants higher rates. And the problem is that war chest that the Federal Reserve had with the banks, $2.5 trillion, it's more than half gone. And at this pace, that war chest is going to be empty here in the next 90 to 120 days. Then what happens? Right now, the banks can do it and say, okay, I'm tapping into the war chest. I'm tapping. Well, now it's like, wait a minute, I got to buy it and I can't tap into the war chest. That's a much different problem. And this is why I think the Fed's done hiking, despite the huge GDP number, despite inflation being too high, because no matter what, rates are going higher just simply because there's too much debt and there's not enough buyers. And we're not the only, listen, China's selling incredible amounts of bonds. Japan's selling bonds. Everybody's at the same time, Jason, they all need to sell bonds.
Yeah. I mean, the Fed has been tightening for a while now, which means they're not injecting a lot of cash. And Joe, you say they won't raise rates, but I mean, I still think there's this situation where, you know, look, the Israeli war is starting. They're going to print more money. They're going to avoid the government shutdown in some fashion next month, which is going to be spend. So to me, Joe, it's got to be spend money, and then when inflation gets super hot again, they have to raise rates, don't they? But is there any rule against raising the rates and printing money, which obviously just makes it much worse in the future, but kind of saves you in the here and now, you know? Because they can't let if inflation gets out of control, Joe, what are they going to do if it's 10%, 20%, 25% inflation, right?
Going to be really interesting what is going to happen. My guess is the first thing to happen. So let's just look at the catalyst for gold and silver right now. Obviously, the Middle East. That's a huge catalyst. As a matter of fact, I think we're going to, be talking record highs just on that. Forget about Iran and all that for a minute, because we don't know. That's a wild card. What oil is going to do, what natural gas is going to do. By all accounts, we're a couple of weeks away. The Fed is not going to raise rates again. Most people, and throw me in that camp, now it could change, think that's it. The Fed is done. I think the markets are going to assume the Fed is done. Without the Fed saying they're done, is going to assume they're done. That's bullish for gold and silver. The next issue that I see is the reverse repo money, just like we've talked about. You're going to start hearing talk before the end of the year that the Fed may stop quantitative tightening, right? Because, okay, we're already having a hard time selling all this stuff, and the Fed adds to that amount, okay? Let's stop that. That will also maybe keep interest rates from going super high, right? That'll at least give interest rates a little break, right? Because, well, that's going to be less supply. I think that's coming. Extremely bullish for gold and silver without the Middle East, without tariffs on Iran's oil or embargo on Iranian oil, or without the Mideast war expanding. Then you throw the Mideast in there, Jason, and you can see a setup where things get ugly very quickly, and gold and silver really outperform. Then you have things like this. Ford and the UAW. We may have a deal here. Now, the union still has to vote. General Motors and Stellantis aren't here yet. But in this deal, they're talking about a 25% pay raise. They're talking about a yearly cost of living allowance, right? So they're going to track inflation. So add that to, let's just call it 4%. Well, that 25% plus 4%, right, over the length of the deal, you're talking about 50%. But it gets actually a little worse. The top wage earners will cumulatively get 30% more. Okay, so they'll be above $40 an hour. starting wages, this is where it gets a little interesting, 68% more. They're now going to start at $28 an hour. The lowest paid workers at Ford will see a raise of more than 150% over the life of the deal, and I think it's a 4 or 5 year deal. So you can see the cost that we're talking about here, in addition to more health care benefits, better pension, better 401k. So there's a lot of extras on top of just the earnings. And according to Ford, they said that they are going to increase the price of the F-150 Lightning on their 2024 models by $9,600. So essentially, hey, by the way, all of this stuff, there's another 10 grand on our most popular pickup truck, Jason.
That's almost like adding a really bad used car on top of the price of the new truck. you can buy a couple of 2 or 3 used cars for that price, Joe.
Right? Yeah. Get ready, right? Imagine what that payment's going to look like. Yeah, pass. 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. Today, if it's me, today's the last day. I don't know that we get through the weekend without more developments in the Middle East here. We'll see. Last day, $20 gold pieces, $2,195. And gold's higher today than when we started it yesterday. You're saving $30. Take advantage of that. $5 liberties. I still got some $5 liberties. They're at $565. So some people are like, man, I don't want the 1 ounce. I want something more fractional. 4 $5 liberties is $2,260. So it's a little more, right? You're going to pay a premium, but it's not outrageous, right? $565 on the $5 liberties, and then on the silver side, the silver rounds. I mean, that's just the deal of the day right now in silver. You're looking at $530 on rolls of silver rounds. We got a couple of different rounds. We got some buffalo rounds. We got these dragon rounds. You're into dragons or cool stuff. Just tell the girls that you want some of those. I mean, rolls of silver eagles, still good, but $615. So that's $85 more that you're paying for 20 ounces of gold, Jason. That's like $4.25 difference between a 1 ounce silver round and a U.S. Silver Eagle. So, either way, you can't go wrong either way. But today would be the day. This is because I'm kind of thinking that tomorrow either it's going to start or they're going to make the big announcement, right? Whatever it may be, because they always like to do things on the weekend, right? They don't like to do stuff when the markets are open. But we'll see. We'll see how it works out. 800-951-0592. But yeah, definitely, Jason. Whether or not whatever happens in the Middle East, what we see over the next 90 to 120 days is just this bullish pattern for gold. And we're kind of seeing in the last couple of weeks, it's been really weird. When the 10-year note rises, gold rises. Like today, the 10-year note's actually down, not a lot, but it's down. Well, gold's kind of flat to down a couple dollars. It's kind of weird now that gold's running with interest rates, and that's exactly what happened in the 70s. When you really think about what interest rates did in the 70s. And yet gold went to all-time highs during that period because it was rising with those rates, and I think we're setting up here again. Now, I do think that the Fed is going to is done hiking rates. That's just my opinion. Now, things could change that. Obviously, there have to be huge shifts in inflation for that to happen. But I think the Fed, at least for now, for this year, I think they're done. That's positive for gold. That's positive for silver. I think we're going to hear before the end of the year that quantitative tightening's over because they just are struggling to sell this debt. And let's not forget Japan. This is a big problem. At least today, it appears to me, and it's early yet, the Japanese 10-year note, 0.89. And they're kind of drawing this line that Japan every week, twice a week, has had to intervene in their own debt market to keep their 10-year note below 1%. And then yesterday it happened. Today it's gotten worse. The Japanese yen has broken above the 150 mark, and now it's 150.47, which tells me, at least right now, at least for today, the Bank of Japan is saying we're more concerned about keeping control of the debt market than we are about keeping control of the currency. But either way, Jason, something's going to break in one of these markets, and you believe me, you'll want to have a lot of your stuff already put away before that happens.
That's right, Joe. And you're saying how the rates going up seems to be gold going with it. I think it's because I think the rates are reflecting the inflation, maybe a precursor. And if the rates are reflecting inflation, inflation also reflects gold price. So I think that's what we're going to be looking at. And I think you're right. There might not be rate hikes this year. I just think if this looks as bad as it looks to me, and the inflation gets really, really bad, they're going to have to. I mean, I don't know how they don't. So sometime in the future, raise rates even further. And if the 10-year note and these other indicators keep going up, can the Fed just leave them down all low if the Treasury rates just keep on going up, Joe? I mean, how long can that last?
Yeah, I mean, I think rates are going up whether the Fed wants them to or not. Just because of issuance, the fact that the dealers are being stuck with so much of these auctions, and they have to. Otherwise, these tails already, think about, yesterday, add to it. We've got more than half of the top 10 worst tails in auction history that have occurred over the last couple of weeks. And think about how much the dealers have had to buy to keep it where it was. Because if they didn't step in and buy it, right, that would have meant what? The tails get even bigger. It's going to be a big problem. Now, President Biden coming out now and saying that we need to get this money to Israel and Ukraine as quickly as possible. Also bringing up Taiwan as well, because remember, Taiwan is getting a bunch of this money. And Jason, believe it or not, one of the reasons he used to pitch it, well, it'll be good for the economy because, the defense contractors are going to have more work. They get to build, more bombs, more ammo, right, more everything.
That's the whole get the economy running because of destruction. Yeah, if you it's one of those backwards economic ideas where if you destroy a whole bunch of things, the economy gets going because they're rebuilding. But if you destroy something that's already been produced, you're destroying the efforts and the work that was put in originally, and then replacing it with more work and effort. So, it's a good way to try to calm down some of the problems economically, Joe. But it's always a bad answer. It's always a bad answer. Yeah, I know after World War II, the American economy ballooned, but the rest of the world had to slowly crawl out of that mess, didn't they, Joe?
Yeah. Well, and again, just as more debt added, right? This is, look at GDP, 4.9% GDP, and it wasn't good enough, right? I mean, this is what we're dealing with right now. And Joe Biden now that there's a new Speaker of the House, man, he wants some money spent, and money spent right now. Take the Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason here on this Thursday. $20 gold pieces. And you know why we like the old gold. Everybody loves it. They do. Because why they like the idea of, wait, it's the most private way to own something? Yeah, I'm in for that. You know, what does that mean? Well, number one, the government considers it a collectible. It's the only thing, the only gold that they consider to be collectible. Gold eagles, buffaloes, bars, Krugerrands, maple leafs, you know, whatever other form of gold you can think of. In the eyes of the government, that's considered bullion. Well, that's a difference. Well, what does that mean? Well, really, the differences apply to a couple of different things. Number one, when you go to sell, you want to sell gold bars. Maybe you want to sell the Krugerrands because they're cheap, right? You know, there's a lot of people that, hey, I like to buy cheap. And cheap's relative, right? Obviously, when you're paying over $2,000 for stuff, right? You know, that's a relative term. Anything over $10,000, it's $10.99, right? I got to get your Social Security number. I got to get my accountant on the phone, right? We got to send you a 1099, right? Then you got to deal with that on your taxes. Then when you think about, how about IRAs? We do precious metals IRAs here all the time. Do you know that, can I put gold eagles? Can I put buffaloes? Can I put Chinese pandas? Can I put Canadian maple leafs? Can I put Krugerrands? Can I put gold bars in IRAs? Yep, sure can. Can I put pre-1933 U.S. minted gold in there? Can I put liberties and saints and Indians into IRAs? Nope. Nope. Why do you think that is? Right? Not only can you buy, sell, and trade pre-1933 U.S. gold, not have to give out your Social Security number, not have to worry about a 1099, you're on your honor. But the fact that they don't allow them into IRAs, at least in my mind, says to me, if the government wants to go and confiscate gold again, right? When they confiscated gold in 1933, the only gold that you could keep were collectible gold coins. If you had collectible gold coins, you could keep them. Everything, all your saints, your liberties, your anything, they had to be turned in. But if you had older U.S. minted gold, if you had older foreign gold that was, you know, Roman Empire type stuff, you could keep it. Now, I don't know if they're going to confiscate gold again. I don't know. Right? We know China has been buying lots of gold. We know that there's people out there speculating, hey, BRICS may back currency by gold. I don't know what's going to happen with here's why. Let me just say it this way. I know fiat money's coming to an end. Because that's what it does. It always goes to zero. Here's a great thing. A German mark. What's that worth today? How about a French franc? What's that worth today? An Italian lira? It's worth nothing. What happened? It went to zero. Now they've got the euro, right? The Federal Reserve note's going away. The Japanese yen is going away. Now it's going to be replaced by something, but it's going to zero. The only thing we don't know, right, is what it's going to look like. How bad is it going to be? And will they need something? Gold. Some people say maybe some countries oil, right? Some kind of a commodity to back debt so people will buy debt again. Right? Is it going to be so horrific that the United States says, man, if we don't back debt with gold, people won't buy it. Right? Right now we talk about how they're having trouble selling all this debt at these auctions. I don't know. I don't know if that'll be the case. It's definitely a possibility. So do right now, if you're asking, do I think we'll confiscate gold? I'm going to still say I don't think so. But I'll say this. The 5 years ago, 10 years ago, I would have said, yeah, I'm 95% sure they're not going to confiscate gold again. Today, I'm like 70% sure. Right? That's, 70, maybe 75, maybe 65. 65 to 75% sure they won't. And now, obviously, do they have to do it like they did last time? No. They can say everything. They can exclude things. But if you go by what they did the previous time, then okay. And, man, wouldn't you like to hold it? Because remember when they confiscated gold last time, it went from $20 to $35. I mean, what will gold be this time? Could gold be 5, maybe 10,000? And all of a sudden it gets revalued at 35,000. Well, man, it'd be nice to have an opportunity to still have it. That's why we like gold the best, right, Jason?
In a lot of ways, they are confiscating gold right now and every other asset that people hold on to, because when you inflate things like they purposely did, I've seen the gold and silver customers that need to come in and sell to us, and we do buy. But, we don't remind you guys as much, but we do buy gold and silver. And I see the people that are just trying to hold on to their stack as best they can, Joe, but expenses come up. Things are more expensive. And how do you confiscate gold? Make life so expensive that there's no asset you can hold on to, Joe, except for, hey, I need to sell everything I got just to make food and rent.
Yep. 800-951-0592. $20 gold pieces, $2,195. $5 gold pieces, $565. Rolls around, $530. Jason and I, we're going to be right back, wrapping up a Thursday edition of the Patriot Radio News Hour. Eight 800-951-0592. Joe and Jason, Patriot Radio News Hour. The Dow, the S&P, the NASDAQ all remain down today. Gold, London has gold up right now, $1. New York has gold down, $2. Price the same here, 1981, rounded up 1982 on gold. Silver down about 12 cents right now, 22.88. The crude oil is off today as well, down $1.50. Of course, it was up big yesterday. And Jason, we're talking about what comes next here. There's not a lot of good outcomes. We're destined, right? Obviously, now we got a Speaker of the House. The president immediately comes out. Let's get some bills signed. Let's spend more money. We got more money to be spent as the war drums continue to get to beat. We have trouble, really, in bond markets all over the world. China's having trouble. China's property is having huge problems. We've been talking about Japan, Europe, here, everywhere. And it doesn't look like there's going to be any end in sight. We start looking at the U.S. debt auctions, and it's very clear. Less people are coming. They want more than what Wall Street has been setting the price at. And the dealers, the banks, are being forced to buy large pieces of this just to keep rates, from going really bad right now. My guess is if the dealers would only buy 5 to 10% of these auctions, the 10-year note would probably be 5.25%, maybe even 5.5% right now. And that, of course, would what? That would force a lot more pressure already on whether it's commercial real estate, companies that got to refinance debt, the banks themselves. There's not very many good things. Even a 4.9% GDP, and it's not good. Those are why you want to get more gold and silver put away. If you're brand new, you've been listening for a while, take the plunge. Maybe you start with a $5 Liberty at $565 or roll around at $530. Maybe you want to go and say, you know what, I want 20 of those $20 gold pieces at $2,195. Just call up, call the 800 number, tell the girls I want the special. But today they'll say, hey, which one would you like? Just tell them. If you have questions, call. I'm going to tell you, here's what we don't do, because I know, like, everywhere else, you call everywhere else, you get called to death, right? They're calling you, they're mailing you, they're emailing. We don't do any of that. We respect your privacy. If you call us up and you ask questions, you never hear from us again until you call us again. You call up and spend $1 million. You never hear from us again until you call us. And you know what, Jason? That's something, that's a rarity in life. And, of course, they'll tell you that, well, that's not how sales works. Double, you're a bad sales guy. You should be out there. No, maybe. I know I don't like it when that happens. Right? I hate it when that happens. And I'm not going to do that to you guys. 800-951-0592. Take the time. Add to that portfolio. I like the timing right now because I do think this weekend we're going to get movement in the Middle East. And it's probably not going to be the kind that most people are going to like. Jason and I, though, hey, you know what? We're going to come right back. We got a new person on the half 50 cup. Stay with us.